Curran. I'm Managing Director and Principal Consultant at Blue Planet Consulting. I've spent about the last 20 years in the sustainability and ESG space, slightly longer actually, mainly focused on large strategic sustainability projects, working across sector, mainly focused on things like developing policy, plans, targets, and helping businesses to embed best practice, developing measurement and reporting of performance, and then providing guidance and on regulatory and technical matters. What we'll cover today is a high-level background to the sort of sustainability landscape. So the what's happening out there, what's driving the stuff we're seeing around things like CSRD, more specifically the CSRD itself and the background to it, and what it looks like in terms of business implementing it, and then some work around strategy and planning. So how do we prepare ourselves for CSRD? What's the ultimate aims of CSRD? And then how do we go about putting that in place? I think before we start, it's worth looking at the sort of macro issues to do with sustainability today. And there are many, but I've highlighted 5 here. Certainly, everybody recognizes that we're in the midst of a large climate crisis, and that the efforts that we're making remain insufficient really to turn the tide on global warming. We're also seeing, as a consequence of climate change, but also as a consequence of human activity creating pollution and disturbing ecosystems, that we're seeing impacts on biodiversity and ecosystems. We're also seeing massive societal changes. Post-COVID in particular, people in general have become much more suspicious of the way that business operates and expect more of business, and are becoming more demanding of how business performs. At the same time, we've got this massive gap in political leadership on a global level. Very few global leaders are really getting behind sustainability in the way that they need to, and therefore it's often left to business leaders to actually make the change happen. And then against that, we're seeing a massive increase in particularly within the EU, but in other regions of the world as well. We're starting to see a huge increase in the amount of environmental legislation that's hitting us. And there's, everybody is kind of focused on the CSRD at the moment, but there will be more to come, and I'll talk to those as we go through. I think before we start, it's also worth talking about climate change and some of the stark climate facts. Climate change is not the only sustainability issue out there, but it is one that has direct impacts on our climate, which impacts growing of crops. It impacts people's lives, and it impacts business to a large extent indirectly. So it's worth looking at the way that climate change does that. I think if you look at the graph on the left, the white line is actually the rise in average global temperatures over the last 130 years. I should say that this is the global average temperature. This is not the temperature today, or the temperature tomorrow, or the temperature that you had in June or July, or the hot day or the cold day. This is the global average temperature taken from about 100,000 data sensing points throughout the world, added together and averaged. And you can see that when you take all those averages, there's a steady rise in global average temperature over the last 100 and odd years. And that's following very closely the red line, which is the rise in atmospheric carbon. Atmospheric carbon exists because of human activity, the burning of fossil fuels, agriculture and other activities, industrial activities that change the composition of carbon in the atmosphere. And that's known as the greenhouse effect. And that greenhouse effect is what's driving this global change in temperature. And that global change in temperature is important because it has many impacts. It's risen over 1 degree since 1906. And these impacts are visible in the sense that, 2023 was the hottest year on record in over 174 years. So, and again, we're talking average temperatures. The reason that average temperature is important is because it's an indication of the amount of energy in the atmosphere. So more energy in the atmosphere leads to higher intensity storms and more rainfall in particular, but also drives changing weather patterns, which can lead to things like climate change. So the period of our 2023 was the hottest year in 174 years. And every one of the last 10 years, since 2014 to 2023, has broken the record. So 2014 was the hottest year on record, as was 15, 16, and on and up to 2023. Scientists believe that the 30-year period between 1983 and 2012 was the warmest period in 1400 years. How do they know this? Things like ice cores, tree rings, and other research that shows that. The impact of this is things like a loss of sea ice. So sea ice is declining at about 13% per decade. That's important for several reasons. One, that the loss of the ice surface, which is very reflective and reflects a lot of solar energy back into the atmosphere or back into space, that reflectivity is lost, and therefore it causes additional warming of the surface. It also impacts habitats for wildlife in polar regions. We're also seeing loss of ice on land, and that's resulting in sea level rise. Floating ice doesn't create sea level change, but land-based ice does. So the loss of land-based ice, apart from the fact that we're also losing reflectivity, is also contributing to sea level rise. And we're seeing about 3 millimeters per annum. That's not particularly large, but if that's 30 centimeters in a century. But if you live in a low-lying country like the Maldives, or even in parts of Ireland which are low-lying like Cork, then you become more vulnerable when you have sea level rise, and added to that, higher intensity storms backed up with more rainfall and higher winds. We're also seeing changes in, as I said, the amount of storms that we're seeing, and it's not so much the frequency, but it's also the intensity of those storms, higher winds and greater rainfall. And conversely, we're also seeing areas of higher temperature because weather patterns are also changing. So from a species perspective, this is causing species to move. Animals and other insects and the like are on the move. If they don't move, they have to adapt to where they live, and if they can't adapt, they're going extinct. And we're actually seeing extinction rates of between 150 to 200 per day. That's per day, not per year or per lifetime. 150 to 200 species per day. Now, species is everything from microbes, right up to animals and plants, but it is a major impact. The other perverse fact is that animals and pests, particularly crop pests like locusts, mosquitoes, which are human pests, and other flies, ticks, and the like, they're actually thriving because their area of operation is able to expand as the global average temperature rises and we get certain warmer areas of the planet. These are able to migrate. So we're starting to see a spread in terms of pests. So in summary, what we're seeing is global average precipitation increasing, which is leading to flooding, but also we're seeing, because of shifting weather patterns, we're seeing wildfires, which is leading to water droughts, leading to wildfires, which is causing water scarcity. This is resulting in crop failures, which is creating increased risk of famine and disease, particularly in developing countries. We're also seeing that climate change is having an impact on humans in terms of forcing displacement of populations. And this is leading to migration, and some of the issues to do with migration that we see in Europe are the result of climate change. Not all of them, but certainly some of them are influenced. And then we're also seeing increased conflict, because as weather patterns changed and resource availability of water in particular changes, we're starting to see conflict. And we're seeing this now with Egypt and the Sudan over access to the Nile and water levels on the Nile. So that's the sort of high-level view of climate change. When you consider that the world is already under stress, we now need to look ahead a number of years. So over the next 25 years, we can expect around a 25% increase in global population. Population of the world reached about 8 billion in 2022, and it's expected to reach 10 billion by 2050. So we have a world that's already under stress, and now we're going to increase the population by 25% over the next 25 years. And the expectations that we're likely to see a 50% increase in demand for food production and energy, and also a 40% increase for water and for transport. And you might ask, well, why, if the population is increasing by 25%, are we seeing such large increases in demand? And one of the factors here is actually the emergence of a new middle class, the emergence of a new middle class. So as former developing countries like China are moving and becoming wealthier, there's a growth in a middle class, and wealthier people consume more. So they want to live in apartments, they want to have a car, they want to consume better diets, and all of this is creating stress on an already stressed planet. And to put this in a stark contrast, this is an Oxfam graph which shows that the 10% richest people in the world, and we're not talking about Elon Musk and his colleagues, we're talking about us, because we are part of the richest nations in the world. So the richest nations consume half of the world's resources, while the poorest 50% of the world only consume 10% of the world's resources. So when you hear people talking about, population growth in the context of controlling resource use, in actual fact, the major impact comes from developed, wealthier countries. Poor countries with large populations sometimes actually consume very small resources. And this resource consumption, as is all resource consumption, contributes to emissions, and those emissions ultimately drive global warming and climate change. So the responsibility is certainly with wealthier nations. So sustainability has become an issue now for every stakeholder or every business, and it's usually as a result of scrutiny by stakeholders that businesses start to embrace sustainability. And who are those stakeholders? So certainly investors, investment funds, banks, insurance companies, your customers, your corporate customers, all of these want to know about your sustainability activities and your risks, the risks associated. From a customer point of view, they want to know that the businesses that they're doing business with, have strong values and are doing the right thing. Investors, lenders, and insurers want to know that their risk is managed and that they're not going to lose out financially in the event that the business suffers something to do with climate change. Similarly, regulators, NGOs are very interested in sustainability. We're seeing huge amounts of new legislation, but also NGOs are putting greater pressure on business as well, particularly those that operate in the business to consumer space. Employees are very interested in knowing what their employers are doing. They want to be part of businesses that are doing the right thing. They want to work for businesses that do the right thing. So we see it as a talent retainer, but also an attractor of talent. And then society at large, they judge businesses very hard if they do the wrong thing. The expectation is that businesses do the right thing. Consumers don't want to think too much about what you are doing. They want to be assured that you are doing the right thing, and they want you to do the thinking for them. So in a sense, we're seeing four major trends around stakeholders. One is scrutiny, a greater degree of scrutiny around what businesses are doing, looking under the hood and making sure that businesses are doing the right thing. Stakeholders are demanding greater transparency, so they want to know exactly what you're doing. They also want it to be authentic, so they don't want to hear that you're doing all these nice programs and it all sounds good. They want to see real action and they want to see measurable results. And then there's this concept of dependency, which is very much in the realm of business to business. So of large corporate customers of yours who have themselves ambitions around sustainability realize that for them to achieve their goals, they need you as a supplier, aligned with those requirements. So this is why a lot of very large businesses now are putting a lot of pressure on their corporate customers, or their corporate suppliers rather, to deliver. And businesses must be able to demonstrate clear evidence of meaningful action or risk being accused of greenwashing. And for those of you who don't know the term greenwashing, it's really where businesses talk about sustainability, but really don't do a whole lot in reality. So that leads us on to regulation. And no discussion about regulation is complete without mention of the EU Green Deal, which is the EU's agenda for sustainable growth. And it aims to improve the health and well-being of citizens right across Europe. It touches every aspect of our lives now, from the air we breathe to the energy we consume, the buildings we live in, the food we eat, how we travel, our industry, the products we use and how long they last. Also how we're employed and the security of our jobs. And ultimately how you turn the EU into a global powerhouse without negative impacts. And the European Green Deal aims to transform the EU into a modern, resource-efficient and competitive economy. And it does this by ensuring that there will be no net emissions of greenhouse gases by 2050, that economic growth is decoupled from resource use. And this is important because up until now, growth globally has been predicated on free use of fossil fuels, in particular, and energy and resources. And there's a realization that for us to continue sustainably, we need to decouple that. So in other words, we need to continue to grow, but we need to reduce our dependence on resources. And then the concept known as, sometimes you'll hear it called the just transition. As the EU evolves, certain jobs and certain activities will fade out. And it's important that individuals, employees or citizens of the EU and regions of the EU are not negatively impacted and are helped to transform in the event that the EU evolves. So out of the EU Green Deal is the Corporate Sustainability Reporting Directive, and it is the largest single transformation in corporate reporting in over 25 years. It's akin essentially to the introduction of a whole new set of accounting standards, and it will bring profound changes to corporate reporting requirements. It's extremely detailed, and there's a lot of information required. Currently, around 11,000 businesses that are already in scope for the non-financial reporting directive are working through their data requirements for 2024, and they'll be expected to report next year. From 2025, we'll see gradual increase in the numbers of businesses that are being brought into scope, and upwards of 50,000 businesses across Europe. The threshold for inclusion from next year is if you've got two of the following criteria. So if you have employees of greater than 250, assets of greater than 25 million euro, or turnover of greater than 50 million euro, two of those three and you're in scope. The key objectives of the CSRD are to enhance transparency, so that goes back to that fundamental requirement that stakeholders have, to improve accountability. So in other words, by making it a regulatory imperative, it will mean that businesses will be accountable for the activities and actions they take around sustainability. So that will drive greater accountability and therefore greater action. It will also facilitate comparability. So it means that businesses that are maybe not as honest about what they're doing will be exposed. So if two businesses are very similar, but one is doing the right thing and the other isn't, well, then it'll become pretty obvious through the reporting system of which business is better. And the idea here is to divert cash flows or to divert investment towards more sustainable business. And of course, the first three there are designed to eradicate greenwashing. And the aim ultimately is to create long-term value within the EU and of course support the UN Sustainable Development Goals. The timelines, as we discussed already, so 2024 is the first reporting period for NFRD companies with a actual report due in 2025. The vast bulk of other in scope companies will start in 2025 with a report due in early 2026. From 2026, it will be SMEs, and then there's a 2-year gap for non-EU companies with significant EU subsidiaries. The CSRD is underpinned by what's known as the European Sustainability Reporting Standards. They are, as you see on screen here, they cover cross-cutting standards, which are really how the rules of engagement about how you go about setting up your report. The topical standards cover environmental, social, and governance, and as you can see, there are 10 specifics that you need to focus on. And beneath each of those, there are a whole series of subtopics that form part of your reporting requirements. And these are made up of what they call data points, and there are 1,100 approximately. Not all of those will be relevant. They'll depend on materiality, but essentially businesses will need to go systematically through a process to identify material topics and then to provide disclosures on the basis of those. What companies are expected to demonstrate essentially is that they have good governance, that the governance processes, controls and procedures that they use to monitor, manage and impacts, risks and opportunities are sufficient. They also need to be able to demonstrate how the company's business model interacts with its material impacts, risks and opportunities, and including how the business addresses these factors. It also looks at impacts, risks and opportunities. So the processes by which the business identifies impacts, risks and opportunities and assesses their materiality, and how it manages material sustainability matters through policies and actions. And finally, you've got to be able to demonstrate that you've got metrics and targets. So in other words, how your performance, including its targets, are monitored and progressed towards meeting them. So there's quite a lot of rigor here within this. And it's worth saying at this point that for CSRD, the end game here is not necessarily about the report itself. It's about the behavioral changes that it will drive. So ultimately, what does the EU want? It doesn't necessarily want that you can issue a report about your performance. They want that you have the structures and the strategies in place to be able to deliver that performance. I won't labor this, but one of the concepts within CSRD is the concept known as double materiality. Traditionally, we looked at what was called impact materiality, which was the impacts, positive and negative, that a business would have on the world around it. Now we've also got to consider financial materiality. So these are risks and opportunities that are dependent upon outward influences. So climate change has a potential outward impact for business. So businesses, through their emissions, create climate change impacts, but they also are vulnerable to climate change potentially. And that's expressed in the form of financial materiality, both risks and opportunities. So there's a requirement as part of the double materiality to look outward, but also inward in terms of climate risk. And of course, all of the other risks, not just climate, ES and G. The way you identify material topics is, one, you need to understand your organizational context. You need to identify actual and potential impacts, inward and outward. And then you need to assess their significance. So you're not going to be able to, and you wouldn't wish to, start focusing on every single potential risk. So you'll need to identify those which are material, both in terms of scale and scope. And you do this by engaging with your stakeholders. Stakeholders are very important in the whole process, and CSRD requires that you involve your stakeholders. But you can also use your own expertise or external experts to be able to refine your thinking here. In engaging with your stakeholders, who are they? So you need to look at your shareholders, investors and lenders and insurers. These are important stakeholders. Your own board of directors and executive leadership, again, part of your stakeholder group. Your employees and their labor organizations, your customers and consumers, communities, NGOs and civil society, suppliers and supply chain partners and their workers. This is becoming much more prominent now, and there's future legislation coming down the tracks around monitoring and managing of supplier labour risks. And then regulators and government bodies. And effective engagement and collaboration with stakeholders is crucial if you're to achieve sustainable outcomes. Now, I've listed off already some of the requirements here, but the current structure of CSRD is what we call sector agnostic. So every business will have to comply. And EFRAG, the European Financial Regulatory Advisory Group or Reporting Advisory Group, is very much focused currently on getting CSRD across the line. But they are looking at developing future sector-specific standards. So if you work in any of the areas there in those tiles, so coal production, quarrying and mining, road freight, agriculture and fisheries, motor vehicle manufacturing, energy production and utilities, food and beverage, or textiles, etc., then it is likely that there will be additional indicators or disclosures that you will have to make out into the future. There's no timeline at this point, but it's something to watch. Again, this is quite a busy slide, so apologies. Here, what are the key actions to prepare? You need to understand and familiarize yourself with the specific requirements of CSRD and how they apply either directly to you or indirectly through your in-scope customers. Remember that even if you are not specifically in scope yourself, some of your very large corporate customers will be. And we're already seeing that large businesses are saying to their suppliers, we know you're not in scope for this, but we will be requiring information from you. So this could impact you indirectly as opposed to directly. You need to assign overall responsibility for delivery and coordination of CSRD to a senior manager and establish a project team and delivery plan. This will not happen organically, and it's extremely complicated, and there's a lot of resource and time needed. So you will need to ensure that it's properly managed. I suggest you review the ESRS data points and map the location of data and owners of that data within your organization and identify any gaps. And there's some really good guidance on efrag.org. So you can get lists of data points and you can also get guidance. You need to engage with your stakeholders and conduct a double materiality assessment for your business. And look at the ESG your sustainability ESG, and identify any gaps. You need to ensure that your current sustainability strategy, if you have one, aligns with CSRD requirements, including objectives, targets, and action plans for addressing all material impacts. If you don't have a sustainability strategy, that needs to be your priority. You will not be able to comply with CSRD unless you have a robust sustainability strategy. You need to develop robust data collection reporting processes, internal controls, and clear team and individual responsibilities. There's a lot of data required here, and you need to be able to know and put your fingers on it to be able to perform the audit, but also to be able to report as required. You need to provide training and upskilling to employees to raise awareness and equip them with the knowledge and skills to support what is essentially a sustainability transformation. And then you need to collaborate with industry peers, partners, and share best practice and experience in implementing these initiatives and complying with CSRD. I can't emphasize enough how important it is to talk to your business network, because lots of businesses are experiencing this firsthand, and so there's already amount of information and knowledge already out there. So you may be able to short circuit some of the loops in this. As I said, it'll be very difficult to comply with CSRD if you don't have a sustainability strategy. And in terms of sustainability, it's really about a transformation process. So the EU wants businesses to develop sustainability transformation programs. And really, to do that, I've categorized it, and there are probably more intermediate steps here, but certainly you need to establish a baseline. What are you working from? What is your carbon footprint? What policies and stuff do you have in place? Once you know that, you need to develop policy, because policies set the tone for the business. They set the guardrails as far as how employees behave and ensure consistency. You then need to build an appropriate strategy, which is built upon double materiality. You need to implement plans, so you need to turn your strategy into plans, and then you need to be able to measure and report. The structure that I generally would recommend is something like you have a strategy. Out of that, you have clear goals. You have clear commitments based on those goals, and then you have a whole series of actions to deliver those commitments and upwards. Those need to be underpinned by robust, well-tested policies, and of course, KPIs and targets. If you don't have KPIs and targets, it would be very difficult to actually measure and manage your development. And in order to begin this transformation, it requires leadership. You need to set the tone from the top. This is not something that can be done by some subcommittee somewhere within the business. You need the CEO or the senior leader talking about sustainability and resourcing people to be able to do it. You need to ensure that your culture aligns with your values, beliefs, and behaviors, and with the policies and procedures and practices of the business. Engagement is important. You need to communicate to drive behavior change, supported by internal champions. And I can't emphasize that enough. You need to use the resources at your disposal within your business to try and drive this transformation once you've got a clear strategy in place. As far as talent goes, you need to either recruit or retrain people within the business who are passionate about sustainability. Oftentimes, it's easier to retrain good people than it is to recruit new people to the business. You need to upskill people. If you expect to conduct a sustainability transformation, well, then you need to help your employees to know what their role is in delivering that transformation. So you need to train employees on sustainability principles and practices and technologies. And then you need to collaborate, as I said, build on your pool of knowledge by working across your value chain. There's also a lot of good government supports and guidance out there to help you. And ultimately, you're looking to create a sustainability mindset and make sustainability part of everyone's role within your business. And this is key. If you compare it to something like safety, if you're running a business, you couldn't expect that nobody cares about safety and that it's only the safety officer's role. You would have safety issues. So that's why we train people for safety. And in the same way, we need to upskill and inform people around sustainability so we can get them to behave. And then that's underwritten by good policy so they know what they need to be doing. So ultimately, sustainability and ESG strategy will deliver a whole series of outcomes. And those outcomes are, one, that you will differentiate your business. What we see now a lot is that businesses are under pressure from suppliers, and ESG is starting to creep into tenders or contracts. So if you want to differentiate yourself from your competitors, then you need to integrate sustainability and ESG into your business. It's also a demonstrator of leadership. It will assist you with compliance. It will enhance and an equal measure destroy your reputation if you get it wrong, but it's certainly an enhancer of business reputation. It's what your stakeholders expect. We know it drives innovation. Once you start to dig into your business, embed sustainability principles, and start to look at the way you operate your business, you start to see opportunities, and those opportunities will help you to innovate. As I said, it's important from the point of view of employee engagement, but equally in terms of talent, attracting and retaining talent. No doubt there's a cost to this. You don't get this for free, but very often, if you get it right and you focus in the right areas, you will also make a lot of savings, and those savings go to the bottom line and deliver profitability or assist with your profitability. And ultimately, what you end up with is long-term business transformation. This is not a sprint, so you can't just do a pray and spray type effort on this. This is about starting, embedding the right principles, and then evolving it over time. No one is expected, and the CSRD doesn't expect you to achieve perfection in year one, but what it does expect you is to have a plan that looks forward and has an evolutionary process that your business develops and improves over time. So that's me. I'm going to hand over to Michael now. Thank you very much.
Thank you. Thank you, John.
Thanks, John. And good afternoon, everybody. So my name is Michael O'Shea. I'm the CEO and co-founder of Pulse. And as Andy said at the outset, we're going to have a series of webinars monthly to have experts like John give us the kind of detailed information that we just got from John in a very short space of time, and we covered a lot of ground. But just to tell you a little bit about Pulse and what we are. So we're an Irish-Scottish sustainability firm. We have a sustainability platform and a set of services around that. And that platform, basically, it's a sustainability platform. What does that mean? So like QuickBooks or Xero or Sage are for financial data, the place that a business stores them. Pulse is for non-financial data, for sustainability data. And our goal is for our clients to store it once and to use it many times in service of CSRD. John went through the 12 ESRSs, but also it can potentially be used for the same information or a lot of overlapping information for SECR, for CSTDD, to submit to EcoVadis, to prepare for and submit to B Corp. There's multitude of different reasons to use the same data, and basically the platform supports managing that data and organizing it in one place. One of the key features as well that we have, which John referred to earlier, I was taking notes, and he was talking about scrutiny and transparency and authentic, and we speak to all that because it's about preparing for audit, an auditable, organized set of data that can be given access to your auditor. But he mentioned dependency at the end, and that's all about engaging with your value chain, your more broadly or specifically your suppliers, to gather the data from them. And we have a module that allows you to go out in a safe, secure manner to gather primary data from your suppliers, from your customers, from your investments, from your partners. And then finally, just to, and move the slide along, excuse me. One of the key things that we're doing is around collaboration. So working with the services that we're supporting around the platform are what we like to refer to as cradle to grave, from training to sustainability, implementation, strategy development and implementation, to audit preparedness, and ultimately to the auditor. And we're working with sustainability consultants like John and the guys at Blue Planet. We're working with auditors who will be ultimately checking the information that's been prepared in order to be able to sign off on the annual statement, in order to provide that cradle to grave service around a platform that has that auditable and tracking capability, and that gives you ultimately the ability to monitor and to analyze as you go forward. So that's it from Pulse, or from me. What I'd like to do now is hand back to Andy and maybe have some Q&A if there's any for John and or Andy myself.
Yeah. So we've one question here. John, could you speak a little on the auditors having to give an opinion? Initially limited assurance, but moving towards reasonable assurance under CSRD, and how they will approach this.
Yeah, it's a good question, Andy, and thanks for the attendee that asked that. There's a lot of uncertainty about this at this point. Even when you look at some of the words that are used, they're talking about moving from limited assurance to reasonable assurance over time. So it doesn't even say over 5 years or 10 years or a year. There's a degree of uncertainty. The audit firms themselves will admit that they, I suppose, are trying to gear up for this. So I would imagine once the first cohort of reporters report in early next year, these are the very large firms, we'll learn a lot about the process from that exercise. But right here and now, it's difficult for anyone who's involved in this to be able to say definitively what the auditing process will look like, the degree of scrutiny that there will be, beyond maybe selective data points being analysed and then some commentary about those. But it is an area that's like lots of the aspects of CSRD. There's a degree of uncertainty about it at this point. It's a sort of a movable feast, I suppose.
Yeah, and I think it's fair to say, John, as well, auditors are going to be in a situation where they need to be able to have access easily to the data that's required for CSRD. I think one of the challenges will be for auditors not wanting to run around a company looking to grab emissions numbers, grabbing HR details around diversity of boards and employees and so on. And I think one of the things that what Michael was saying there is to have the data in one place is going to make, in my opinion, a monumental difference for auditors.
Yeah, absolutely. I mean, many people, I'm sure, on this call are familiar with financial audits, and it involves your auditing company sitting in an office somewhere in your business for a number of days, and there's a trail of people in and out with information. So they're not going to certainly want to go running all over the business looking for this stuff, but they will expect that the data can be presented to them. I imagine, or I envisage, and from speaking with some auditing firms, I envisage that they will have a list of data points overall. So they'll do an overall kind of a scan of the report, but then they'll pick specific data points and look to do a deeper dive on those.
Yeah, I think sample checking will be. I always look back, as I've been an auditor in the past. I always look back and thinking that the book of records that you really start with, even though you are auditing the accounts, is the bank statements. The bank statements are the first thing you believe to be true and fair. This is what actually happened. These are the sales figures that have come into the bank. Okay, add those on, plus what's outstanding to be paid. That's the sales for the period. It's going to be difficult to have. You don't have a set of bank statements. I think with the Pulse platform, you have, whilst the question does ask, how does the auditor ensure that the information is correct? At least with the details on a platform, you have a starting point. You have a place where you can go, this is all the details. Now we're going to have to do spot checking. We're going to have to do deep dives, as you said, John, correctly. Thanks for that, John. I hope that answers your question. We have a couple more questions coming in. One of them is, are there any grants available? I don't know if John or Michael want to speak to that.
I can probably talk to that a little bit, but for companies in Ireland, and maybe I'm only talking in the Irish context, there are grants, and quite substantial grants, available for clients of Enterprise Ireland and or for clients of the local enterprise office, the LEOs, they're called, local enterprise offices around the country. So yeah, there's substantial grants available, and if somebody wants to drop me a line afterwards, I can provide more information on the specifics there.
I think the grants, as my understanding as well, Michael, are substantial for people to start the journey. They give companies, from what I've seen with Enterprise Ireland grants, they give a company a chance to get on the journey. And as John said earlier on, what's required now is a demonstrative proposition that you've put together to show you're on the journey, and a lot of that is covered by Enterprise Ireland grants, which people can apply for.
Yeah, and actually, Enterprise Ireland have only in the last week published a whole new set of grants. So I suggest that you know, if you're an Enterprise Ireland customer, that you have a look on their website or talk to your account manager and see what opportunities there might be to avail of those grants.
And it would be remiss of me not to say that there's for those who are looking to start their ESG journey, we have what we call the Pulse Discovery product, which is a stepping stone or a starting point, and which is covered by one of those grants. So very happy to talk to anybody who's interested in looking at that.
Thanks, guys. Next question here is, how long does it typically take for the entire process? I think I know myself, that's a bit of how long's a piece of string, but
yeah, I mean, it depends on so many movable factors, I suppose, the scale of the business, the complexity of the business. I'm almost tired of hearing myself use the sort of leaving cert analogy, but it's a bit like, you know, if you're intending to sit the leaving cert, well, one, the objective is here is not necessarily to pass the exam, even though that's important, but it's the education that you gain along the way. And similarly, with what CSRD is forcing businesses to do is not necessarily just to perform a tick box exercise and pass the annual audit, but to actually embed a sustainability strategy. The scale and scope of that sustainability strategy and the complexity of that strategy will depend on the size and complexity of the business. But you need to see it as an evolutionary process. You need to make a start on it, and then it's you know, you could have your business, you could have a strategy for an SME, let's say, or a medium-sized business. You could have a strategy in place within about 6 to 8 months. But at that point, you're still only at the starting point. You've developed your strategy, you've built the foundations. You're now moving forward from there. So if you don't have a strategy already, it's going to be vitally important that you start to look at, well, how are you going to develop and embed a strategy? But the process, and so much, there's so many variables here, I'm almost afraid to give you a definitive time, but best case scenario, 6 to 9 months, I would say.
Okay. I'm going to move on to a couple more questions. One gentleman here said, excellent, and thanks again for your presentation. You're very welcome. Just a brief suggestion. I believe education and corporate partnership is missing a beat, and perhaps engage in delivery programs. Universities should include in all degree programs the understanding and information relating to EU directives, ESG and reporting ESG measurements. All ensure the next generation, so it means also ensure the next generation move through education in this space. Would you agree?
Absolutely, yeah. From my perspective, I advise 1 or 2 universities in Ireland, and what's happening now is that there are, apart from short-term courses on sustainability is being embedded in engineering courses, in legal courses, in, you know, you name it now. There are sustainability modules either already in place or being developed. So you will see this transformation over the next number of years. And in fairness to the universities, they've been very good in approaching business to understand what business needs are so that they can tailor their offering to best suit business needs, rather than just creating academic or general type courses. So I think your comments are extremely valid, and I do believe you'll start to see that over the next while as more universities start to publish courses.
Yeah, I think also when we talked about auditors and so on, it takes 4 years of hard study to become an accountant, and then another probably 5 or 6 to become good at it in practice. and without college really focusing modules and so on this area, you are absolutely correct. They are missing a beat. One more question, if we have time, is recently we have seen net redemptions from ESG type funds. So money's leaving these funds, obviously. Is this potentially an indicator of fatigue setting in from the investor community?
Yeah, I've heard a lot of commentary over a while about the sort of the death of ESG, that it's no longer becoming important or whatever. To be honest, there's no doubt that investors and those who operate in the market will move funds from time to time for whatever reasons they have. But certainly, if you look at the way the regulatory landscape is evolving, there's no escape from this. The EU has nailed its colours to the mast as far as sustainability is concerned, and forcing businesses to comply. I think you'll also have seen that a number of very large corporations have dialed back somewhat their ambitions around sustainability. And people have sort of said, well, look, these big businesses are dialing back. So therefore, that's sort of an indication that ESG or sustainability is going out of fashion. My theory on this is that those big businesses overstated their commitments or their ambitions and probably greenwashed a little bit, and are now facing into CSRD, where they will have to show categorically that they're doing what they're saying. So rather than be exposed for greenwashing, they're backing off a little bit in terms of their focus on or their level of ambition, let's say. But there's certainly no doubt in my mind that the EU is serious about enforcing CSRD. And in fact, I know that other areas of the world, Japan, for instance, I was speaking with clients in Japan recently, and they were very well aware of the CSRD and the impacts on business and investments in Europe, and how that will actually happen in other countries. So the expectation is that CSRD will become the gold standard, and that other areas of the world will start to up their game as they see CSRD take hold.
Actually, I had a very similar conversation, John, with a partner in the US, and people talk in the same kind of vein as the question that was just asked there. What is the difference that the next president, the winner of the presidential election in the US, is going to make? The expectation being that perhaps Trump might be less aggressive in proceeding down the ESG agenda than Harris. But one of the things I found very interesting in meeting with that partner in the US was the number of clients in the US with significant revenues into Europe that are very concerned about the impact of CSRD, not directly, but down the value chain. And that's it's very interesting to, as you say, in Japan and in the US, but throughout the world, CSRD has a reach.
There's absolutely no doubt, Michael. I speak to people in lots of different parts of the world. Everybody, it's surprising how much people in other parts of the world know about the EU taxonomy, CSRD, the corporate due diligence directive. We didn't cover that, but that's the next chunk of stuff that's coming down. We've now got the EU deforestation regulations. So there's a whole raft of regulations that will manage how the EU trades. And if you want to trade with the EU, you will be required to comply with those, particularly if you have significant undertakings within the EU, like multinationals and that. So I was with a group yesterday where many of them were multinational employees of multinationals, and they were saying that the shockwaves have gone back to base sort of in the US or wherever the parent company is, and these people are all sitting up taking note of what's happening in the EU.
Okay, folks, we have no more questions that we need to answer at this moment in time. Can I thank everybody for coming on and listening to our talk today? And if anybody has any questions or wants us to maybe support them in an initial discovery program, or help them in any way through this journey, or give them a better understanding, please do not hesitate to contact us. We'd be more than happy to do whatever we can to support you. Thanks again, folks. A pleasure. to have you here. Goodbye.
Okay.